Tonight, in a very special nighttime episode, that's right, crypto never sleeps and we never sleep with it. Bitcoin is breaking out and has not done this since 2016 and 2019, both dramatic and explosive moves to the upside. Today, I'm very proud to bring on my good friend Eric Krown from Krown's Crypto Cave. He is without a doubt the #1 technical analyst and trader here in the crypto market, and I am truly honored to have him here on the show. He has an amazing YouTube channel where he does a ton of content, so I'll be linking his channel in the description of this video. Definitely go check him out and give him a follow. So if you guys are excited to hear from one of the foremost authorities on TA here in the business, going ahead and dissecting the current moves on the Bitcoin chart and what it means for this entire industry, and I'll give you a hint, these are very, very good things, then do us a favor and smash that like button. Now, without further ado, let's dive in. Welcome back to FUD TV, and for all the new viewers who are just entering the space, it's my pleasure to introduce Eric Krown from Krown's Crypto Cave. How you doing, bud?
Man, it's a pleasure to be back here. I always feel like whenever I come onto FUD TV, it's kind of like where I almost started in some sense, meeting you about a year and a half ago. And it's been an absolute pleasure getting to know you, of course, and also the community. So good to be here, man, especially on today as well, when Bitcoin's actually doing something new for the first time in about 3 months. It's exciting times.
For the first time in forever. Yeah, it's been a long bear market, and we met about 6 months into the bear market, not realizing there would be another 2 years of it, really. But yeah, it's been great. We've made some great content for all the new viewers. Krown is absolutely a maestro at what he does, and I'm excited to hear what he's got cooking up for us, because I'm assuming that the charts are reading excitement. The charts are reading big emoji smiley face right now, is what I'd imagine.
Yeah, the eggplant and smiley face. Right now, man. But yeah, I suppose let's pop right into it. Why don't we?
Yeah, and for everyone wondering, Krown has his own channel where he does daily TA. He does hours of it, and he keeps you up to the minute informed. So you want to go over to Krown's Crypto Cave if you like what you're hearing today, and go ahead and subscribe to his channel for sure. Links in the description.
This is actually the Krown Chain application. I do want to point out a few things here before we get into the actual charts themselves, but there has been a couple of changes of behavior over the past like 3 months or so, when Bitcoin's got into this consolidation range between about what is it, like mid 8,000 and about 10,000. We have actually seen the open interest head above a level that we haven't seen in a very long time. We are above 2.3 billion. That's billion with a B. And what's important about that, I realize you can't see my face right now, but I'm still talking to the camera. What's important about that is the fact that we actually see open interest increasing while price action is breaking the long-term range after 3 months of consolidation, which is now being verified by volume as well. Putting these puzzle pieces together, looking at both the open interest, volume, and just formations here in general. Let me pull up a completely fresh chart. We'll use this one, GDAX. This really does help confirm this whole formation has actually finally resolved to the upside. This formation that we've been working on ever since Bitcoin got into it early May, it looks like. And with the advent of last night and this morning for myself in the Eastern European time zone, and I'm sure those of you in the Western Hemisphere as well probably just going to bed to this. This does essentially verify that the rally is more or less real. Now, of course, there's going to be volatile moves in after a nice breakout like this. Both the upside and the downside, but overall the bias essentially set in as far as the higher term timeframes go for myself, that the upside target, which we've been having up towards about 11,000 off of this formation, is very much valid here, which is actually one of the gaps present on CMEs coming in back from what is this, about a year ago, August 2019, right here, just flipping around these charts, also synonymous with the 786 fib here as well. So there's areas of interest to the upside right now, but, and I'm kind of getting all over the place, but I'll bring this full circle, I promise. But the picture that I'm painting essentially right now is that, one thing before the next. And as you can see right here, Bitcoin actually has had this change of behavior on the long-term timeframes, which is going to, which technically does initiate those targets up towards 11,000, 11,500. That's where things actually truly get interesting for the Bitcoin hodlers or the moon boys, whatever you want to call them, the people who truly believe in this asset, as anywhere above 11,500 is going to actually actually really be demonstrative of a long-term macro change in behavior. So not just a long-term time frame change, which is kind of what we're seeing right now. And the way that I define them, this area is a macro area. And to explain the relevancy of this area, let me actually pull up a more clean chart. There we go. To explain the relevancy of this area, we'd have to go all the way back to January 2018. And you can see that Bitcoin's been getting rejected from about 11,500 with all these massive wicks to the upside for about 3 years now. And this is very indicative of institutional order flow dynamics at play. And what that means is that when you get an area like this, where you see a bunch of these major wicks to the upside, in the case of sellers, and then price action moves rather aggressively to the downside very quickly after that, that's essentially telling you that the big boys, the big accounts, the big institutions are getting their fills. They're getting their short fills in this case within this region. So that would also follow that if Bitcoin could close above that region, especially on a weekly, then we would have a macro change behavior. And in this case, that's when it actually is relevant to look at this from a TA perspective or just a general trading perspective, that we are in the process of resolving about a 3-year long formation here above that region. Now, of course, this is well and far away. Bitcoin's still, more than $1,000 away from that price target right now. But my point is that with the inherent break of this bullishness the bullish break on this formation that we've been working off for the past 3 months, that is very likely going to imply a test within that region, which is also the 0.5. If you look at this from a fib perspective, from the ultimate high to the last major low on this formation, all coming around the same area, would suggest that we're actually have a chance to make that macro switch up here. And this is all coming along the side, as always, when it comes down to trading and technical analysis. Alongside that, Bitcoin meets essentially one major condition, and that is essentially that this is not going to be some sort of massive fake out. Fake outs happen, of course. Fake outs are, it's going to happen here and there. And but at the end of the day, because this is really, really nice and clean levels right here, I would say that there's not really a talk of this being a potential fake out, as long as Bitcoin's especially closing dailies above the breakout point of about 10,000 for more aggressive people out there. But I would even argue that 9,900 is actually actually the area that I'd be watching. So essentially, as long as Bitcoin's above there, I do look for that $11,000 to $11,500 target to be hit over the next month or two, or whatever it ends up being. I don't think that time analysis is something that really can be done, or at least I haven't seen it. The closest thing that you can get is maybe like volatility readings, but that's more so like statistics and probability rather than timing. I've just never seen that. But more importantly, as long as we're above 9,900, I look at the breakout as real. I look at those upwards targets to be hit, with particular interest on the 11,500-ish read, and that is where, if Bitcoin can confirm above that region, that's where, the Moon Boys can really get talking about, 14,000, 16,000, and 20,000 will all be areas of interest going onwards and forwards from there. But because the macro bias has been set in place by getting back above 11,500, if that were to happen, again, we're getting way ahead of ourselves here, but I suppose this is relevant for right now. Then that essentially sets in the bias. And as a trader, I'd just be looking to buy the pullbacks for myself. Of course, not financial advisor, not a financial advisor, but overall, that's when I truly think that the fun party, like the super fun party, begins. Like right now, it's fun, of course, for most people, as Bitcoin's just generally looking bullish here, but realistically, long term, that's the area that I keep my eyes on, and very likely we do see, if Bitcoin were to even hit it to begin with, we do see some pretty nasty pullbacks from there. But at the end of the day, things are setting up here for the long term rather well. And this is also coming along this side. And this is actually really good timing of this particular video, because we're going to be closing the monthly on this as well soon. And the way that the monthly is shaping up is well, it's actually going to be able to confirm a change behavior actually potentially sooner. If this current monthly, being July, which closes in 4 days on the 31st, this Friday, I believe it is, if this closes above about 10,000, what is this closing area right here? About 10,800. We could also confirm that as a change of behavior as well, and realistically, that would kind of align with that weekly level of 11,500. Obviously, the monthly is going to be a little bit more lenient towards that fact, because you can fit 4 weeks into a month essentially. But my point that I'm painting here is that as far as the higher term timeframes go, which do speak to the macro, it would again kind of align within that narrative that Bitcoin will have a chance here, as we do see monthly Stokes still pointed up and north, looking good. Actually rejection the bearish control zone along the same way. The monthly RSI bouncing along the neutral zone, essentially consolidating as Bitcoin does set in a higher low at the same time, on this monthly scale. So all these things working together with each other does kind of outline that more bullish bias going onwards and forwards. Now we can actually
essentially there's a few cases. Obviously 11 over 11,000 would confirm, would start to really push us into the bullish moon boy zone, and we could start looking at higher targets. But even if we close a monthly here above 10.8, that would essentially show that we would have closed a monthly candle above where our sort of previous peak was from 2019, right?
Yes, which is a change of behavior and essentially has the same implications. Actually, even more so because a monthly is, well, more power. Higher term timeframes are generally just more powerful, is the rule of thumb, I suppose you could say.
Now, I know we had talked about volatility being this low in Bitcoin land for that long. Has historically been a precursor to some pretty massive changes in price in price action. Does this one seem to be showing that it's following the same characteristics so far?
Yeah, I'm glad that you brought that up. So again, also kind of playing into the narrative that what has happened in the last couple of days is rather significant. Is what we'll look at down here. This is historical volatility percentile. To briefly explain this for anyone who's not familiar, volatility in general is a mean reverting indicator that essentially measures the the returns over time for a particular asset, with regards to like the current look back period. That's probably a bad way of explaining it because I'm not very textbook myself. But the way that this works in practicality, and I'll give a few examples here, is that when we look at this, and this one in particular is a historical volatility percentile, we are looking at the percentile of the current day's volatility relative to, I believe I'm running a 365 look back period. No, actually 100. Let's actually put 365. Relative to the last year of price action, essentially. So what this suggests here is that actually in the last like few weeks, we've actually even gotten to like a 0 read a couple times. But for today, for example, we are printing about a 6 read on this, which would suggest that out of the last 365 days, this would be in the 6th percentile of volatility. So it's incredibly low, relatively speaking. In volatility, just in general, higher volatility would essentially imply that, Bitcoin's ranging or moving rather aggressively, rather violently. That's when you get those $1,000 dumps in a day. On stuff like this, when it gets very red, very high, that's that's no surprise that's March of this year, when Bitcoin went from 8,000 to, what is it, 4,400 in about a day or two. Yeah, kind of crazy. Anyways, we've had a few similar reads to this in the past, which I think is really important to go over. First and foremost, the one that's probably most relevant and probably most exciting is this guy right here. Very, 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 very similar action. You can see that Bitcoin puts in an ascending triangle on the lows in the beginning of 2019 right here. Kind of the same thing as what we're doing right now. And during that time, Bitcoin was consolidating on historical volatility percentile for about 3 months, going in from November 2018 to February, March of 2019. Once it actually breaks out right here, where you can see it's also denoted by a major, massive spike up in volatility, that's the beginning of this next major run from about 4,000 to 14,000, a 233% move to the upside within the course of about 3 months, essentially. That's significant, of course, or at least I would argue that that's significant. Now, of course, this is relatively similar to what we're doing right here. This is another ascending triangle, a bullish reaccumulation formation, and the other one was actually more of a reversal, of course. But looking at this guy right here, same sort of implications. We do see that historic volatility percentile is contracting even more aggressively, and these are all relative to each other as well. So a more aggressive contraction phase, which this one going all the way back to March is technically a little bit longer, would imply that the resolution of that, the case being built, is going to be even more violent than the prior ones. And we have a couple more examples other than that. It works both.
So is the move on absolute value, or is it proportional to the price? Because if it's proportional to the price, obviously we had a $3,500 Bitcoin skyrocket to a $14,000 Bitcoin, which is more or less a 4x. Right, and so us consolidating around the $9,000-something level, if we 4x from here, that would put us into the 30,000 range, which is obviously astronomical.
That's a number that I'm not comfortable with saying.
I oh I obviously am just trying to
Right,
follow.
right.
Obviously we all love geometric sort of math, and I'm not saying that that's going to happen, but in theory, the last time we had a similar reading on the numbers you're giving, there was about a 4x growth in the
Well,
price.
I'll give you another thing to chew on as well. It's not always going to be like that, but for example, in 2014, 2015, right here, we see a very aggressive contraction phase as well. While Bitcoin's putting in the major lows there, this one goes all the way from January 2015 to consider this resolved in June 2015. So about half a year, right? This one that we're working on right now is about 3 to 4 months, and that led up to this whole reversal. You might remember this one going all the way from
I remember it.
300 bucks to 20,000 a few years later. Now, of course, is it always going to be like that? No, but that's kind of the implication of the of the potential severity of a move that we could see within this range.
And obviously, up until this point, up until about 48 hours ago, 24 hours ago, it was looking like this could very well resolve to the downside.
It's always possible, yes, until you actually get your resolution. You have to be defensive as a trader, absolutely. But the downside resolution for this one, while it did get tested many times over this last month, which I was bearish on. I mean, I'm always going to be bearish on a read that looks like this.
Mm-hmm.
The closures, the resolution points, which I had marked off. I guess I have it right here at about 9,000. They were never met. So when that sort of thing happens, it's always a potential. But until that's why I believe confirmation trading is just a little bit more on the safer side from my experience, and can kind of keep you out of the more
You don't want to front run any of the signals.
Yeah, you make a little bit more money if you front run, yes, but you also run a lot more risk too.
Yeah, risk management, the name of the game of the real big boy trading. Again, guys, if you want to learn how to trade, specifically professionally, Krown does a great job at helping people go from zero to trading heroes. So definitely check out his courses, because he'll help you guys understand how to interpret these charts in a way that can actually make you a living off this stuff. So definitely check it out. Well, this is pretty exciting, man. I know that obviously the markets have been heating up in a little bit of a different way that they normally do, with altcoins kind of going first this time. And also, I've been showing a lot on my channel correlations between the total cryptocurrency market caps and the Nasdaq. And there's sort of these external fourth dimensions of what's going on right now with federal stimulus, with sort of different monetary policies that seem to be floating markets. And I'm just wondering if you've noticed any similarities between sort of traditional markets and crypto markets, and if there's something to be said for these sort of external factors, which for all intents and purposes seem to be continuing for the short to midterm future. It sounds like we're going to get more rounds of these federal stimulus. And have you noticed what that impact might be? Because it's kind of uncanny that the markets, both crypto and sort of Nasdaq, seem to have performed about the same over the same period of time, starting almost exactly on the date that stimulus was announced.
Right. So, oh man, there's a lot to unpack there. So the way that I think this is most relevant to our discussion is essentially how that kind of relates to Bitcoin, right? I think that's probably what you're getting at.
Yep.
Or just crypto in general. So the way that markets work, and this is knowledge coming from my mentor when I was trading traditional markets, is essentially rotations. Things move in rotations by sector. Well, typically by indice, then sector, then subsector, then individual stocks. And the way that it goes is that typically your strong ones move first. So in this case right here, I'll actually go back to my screen share. The strong ones were the techs, the NASDAQ. And I think that that's no surprise, especially in today's day and age. The only thing that's going to save us probably is technology. And what do you know? NASDAQ, this is NASDAQ futures right here, just showing the front month, but still very much relevant to our discussion, have been making new all-time highs this whole run up while everyone was screaming coronavirus is the next biggest, dastardly thing to ever happen to the world. Maybe that's true, but as far as charts go, this was a very clear low back in March of this year. And then ever since then, just been straight up, just straight up, giving no one a second chance to get in, to get in on a pullback. It's just been vertical essentially. And the way that this looks now is that Nasdaq probably has, found a short term top here. Is it an actual long term top? I think you can definitely make the case for it, but I wouldn't be the first person to short, something that looks like this right here. It's still quite literally an uptrend. So the way that things typically go now is that we'll see the next strong rally, which probably gonna be like the health sector, or if I had to guess, and then probably like retail and housing, whatever it ends up being. And Bitcoin cryptocurrency is somewhere in that mix as well, because we see all these markets essentially related to each other on the macro. Now, macro does not speak to like the day-to-day, action, of course, but the inherent correlation between Bitcoin and traditional markets is, well, it's something that crypto people like both love and hate. But when traditional markets are bullish, then you should probably love it because that has
Yep.
been the trend for the past 10 years. I mean, we can go through and show that, but I don't know if you're interested in that or not.
Yeah,
But more
yeah.
importantly,
I believe that right now
mhm,
it's there's a lot of seeming contradictions in the market. So looking a little deeper, I believe to understand what's happening in crypto, you can't just take a simplistic view of ignoring all the external sort of markets that are surrounding crypto, because
right,
this isn't 2016, right? Everybody knows about Bitcoin and everybody knows about altcoins, and there's major players involved in these games. This isn't we're not a fully disconnected market, right? There's institutional
yeah,
players that are playing in crypto, and they're also playing in mainstream markets, and they, as you said, have much more significant liquidity than your average retailers, right? And so I believe that there's got to be, when I looked at the sort of just total crypto market cap, which is largely Bitcoin, but also now a lot of altcoins. When I looked at that and I looked at the Nasdaq chart, they pretty much, Nasdaq about 2x from the trough of
yeah,
its coronavirus drop, and the total crypto market caps have about 2x since the total trough of their coronavirus sort of fear-induced
right.
drop. And so, to me, to see the markets behaving roughly the same makes me feel like there's a more macro uptrend that seems to me to be very strong.
Yeah, yeah. I mean, there's a lot of theories on why this happened, but essentially it's because all the big players in the world markets, they're all trading everything essentially.
Yep.
And it's just moving money around, finding little arbitrage opportunities between all these different markets. And that's why basically everything kind of moves in some like fractal nature to each other. Anyways, just wanted to show a quick one right here. And it's not to say that like where I think people get correlation wrong, because people always say like Bitcoin's not correlated to traditional markets. Bitcoin went up 2,000% and traditional markets went up 10%. Well, no. That's not how correlation works. That's actually a different thing. That's covariance. Correlation is just essentially saying that when Bitcoin's rallying on the macro, so is traditional markets. And that's exactly what we see going all the way back on over here to the genesis of like 2011, 2010. Things are just generally straight up here for both markets. When they're both correcting, they both correct within about a year of each other. Very, very obvious right here in 2015, 2014,
Hmm.
more recently on the highs in 2017, 2018, also on the lows in 2018 as well,
Wow.
and then more recently in 2020. So the point that I'm trying to make right now is that, traditional markets kind of leading the party, or sorry, not traditional, but essentially NASDAQ, the techs leading the party to the upside for the past 3 months, while Bitcoin was essentially sideways, does suggest that now the techs are probably going to take a little bit of a
A
little bit of
breather.
a slumber party, go sideways and maybe a little bit down, and Bitcoin and company and whoever's next up gets a chance here. So the way that you can look at it is like techs or Nasdaq kind of opened up the door. Bitcoin can now kind of drive through. And so if Bitcoin is going to have a chance, if Bitcoin ever was going to have a chance, right now it actually kind of makes more sense than anything as far as timing goes. If you had to look at it from that nature, which is also being spurned off by fundamental type things like the stimulus checks, it's basically saying that 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 the Fed or the Treasury or whatever it is going to support the markets. So take that as you will, but it does seem like the world has quite a bit of confidence granted upon that. Just by looking at this right here, that they will do that. And I mean, it kind of makes sense geopolitically as well, and we can kind of get into that too. But this is an election year for the U.S., right?
Yep.
And during an election year for Trump, I mean, what's his big calling card? And this is not a political statement. I'm not a political person. I don't love or support any of them really.
Yeah,
But when
I
it comes
bring the
to,
strongest economy. He wants to be able to say that.
yeah, it totally. And so
Every president, really.
yeah, and makes sense. I mean, people are probably going to be more happy when they don't have financial issues to worry about. I can
100%.
definitely I can definitely get that, man.
But
Um,
it is a funny thing, right? Where I've said this now many times on the channel, where the actual average working person is in real trouble right now. Yet
yeah,
the stimulus
yes.
measures, the way they make their way to the public, always invariably favor big businesses, corporations, and the bankers, the financier class.
Oh,
So
totally.
for every dollar, 97, 98 cents is going to the elites, and so that money is getting pumped right into the asset prices that are propping up these precious
Yeah,
and bloated derivative markets that are really what run the world. And so, as long as that stimulus keeps going, and unless there's a huge pivot in manufacturing and industry in America, or the coronavirus
yeah.
just magically disappears and everything just blossoms like springtime in the cartoons, the reality is that we're going to need a whole lot more of this stimulus, and it very well might
Yeah.
lead to, as they said, QE infinity. And in that environment,
Mhm.
that cash seems to be finding a home in assets, and seems to be finding, even though Bitcoin's been a slow mover, it seems that's invariably the case, that it's going to pick up uh, a similar growth pattern to these techs, that you're mentioning. And
Mhm.
that's, to me, helps to kind of close a narrative that I'm very comfortable with and makes a lot of sense to me, which is that
Mhm.
in the end, asset prices are just going to skyrocket, it feels like.
Yeah.
And it feels like Bitcoin certainly is a phenomenal asset and is going to be part of that party.
At least now until probably around election time, I think that that's kind of free range for just about, anything that can rally probably will during that time. And then we'll see how that goes. I imagine that if anyone but Trump gets elected, I would not expect the current environment to continue. I'll put it that way.
It's going to be tricky. It's
I
going to
was
be
trading
different.
traditional market. Yeah, I was trading traditional markets during the last election between Hillary and Trump, and it was always posed like Hillary was going to win no matter what. The polls were very much in her favor, and all the time, the market would dump when those polls would come out. When Trump actually won, I just watched the markets go straight up like I've never seen before. It was
Yep.
quite the sight. So I imagine that it's going to be a lot based off that, and that's from my perspective as a trader, that's actually not my game. So I actually really don't like that sort of environment because it's my edge is technical analysis, not fundamental or political analysis or Trump
Hmm.
analysis, maybe for that matter. But
Yep.
for right now, it does seem like that is pretty much what the government's saying, and that's what they're going to do. And it's not to take away from the average person, as you said. I mean, the average person is not involved in stocks, especially right
Yep.
now. I mean,
Correct.
Jesus Christ, man, the average person probably just trying to like find a job or trying to like leave their home, I'd imagine.
Yep.
So tough times, man. It is really if there's anything more divisive than anything, it's probably that. Just the fact that
Totally.
we're not on the same page right now,
and
unfortunately.
and most importantly, I believe that if this cycle continues, and in this
Mhm.
particular case looks like it gets sped up or goes faster, is there even the potential to correct, to have another cycle, or does this start to spiral, right, where asset prices just start inflating at a sort of almost increasing velocity, because the
Mhm.
only solution to it is to print and print and print? And if that's the only bullet you can fire, then asset prices just keep, I'm of the belief that there is a non-zero chance here, potentially 10 to 20% or something scary even, that asset prices could just spiral upward, without stopping, because it's sort of like the bullets to fix this
Yeah.
are either rebuild the whole country's manufacturing and industry.
No one
mm,
wants to do that. Yeah.
that's tricky. uh,
Doesn't sound very sexy to me.
no, it doesn't fit into 140 characters, that's for
Yeah.
sure. and
Yeah.
uh,
Yeah.
and then
Probably the better route, probably the more healthy route. But yeah,
or
no one
print,
wants to
print,
do that.
print.
You're going to be very unpopular if you're that person. Who wants to stop the party right now?
Yeah, or print. And so I think
Yeah.
printing is going to continue, and at the very least until further notice. And in this climate, um, it seems pretty exciting. I mean, it would make sense that Bitcoin could potentially break through some of those prior resistances, and in doing so, may
Yeah.
get the party started again. But
The problem
have
with that is, though, is that when you do get into those kind of crazier numbers for Bitcoin, you start to realize, well, it could just be a function of the US dollar really starting to maybe do something like the yen perhaps has done. That's definitely a possibility. So, we don't, a lot of people are clamoring for Bitcoin to 100,000, Bitcoin to 200,000,
but
but
under
I'm not
under
so
what
sure that that's the
circumstances do you
world.
want it? Yeah.
Yeah, it might not be the way that the actual world looks in reality at that point might not be what you want.
Yeah, it's certainly a lot of food for thought. If you were to give some advice to some people who are just getting into this game, obviously a lot of people right now are pretty enamored with what's going on in the altcoin space, which is exciting,
Hmm.
right? Because you hear about a coin, you do a
Hmm.
little some cursory research, you buy it, and at least over the last few weeks and months, for the most part, things have been going up like a rocket. But as far
Hmm.
as long term, that those coins are almost completely unpredictable.
Yeah.
Whereas you can actually do TA in a fairly reliable way with Bitcoin. Is that correct?
Yeah, it seems to play quite technically like most hard assets.
If you were to give some advice to potentially someone new coming into the space that wants to actually learn how to trade, what would you say to those people? Because I've noticed, for example, on this channel, we've been absolutely skyrocketing with new audience members, and
Mhm.
definitely by the judging by a lot of the comment section, there's a lot of new participants in the space that are brand new. And so, what would
Yeah.
you say to people who are new to technical analysis, new to trading? Maybe they want to get into trading. What would you say to those people?
Okay. Okay. So, okay, a lot of things that I want to say about that. So, first and foremost, if you really truly do want to learn how to trade, what I'd first and foremost say is don't I would say start trading a demo account. Do not put any real money at risk, and I sincerely mean that. And if you do put any real money at risk, like $5. There you go. There's absolutely zero reason at all whatsoever to be putting any real money at risk while you're in the learning phase, because the learning phase, speaking from experience here and from what I've seen a lot of people go through, can take, a year, maybe 2 years. Some people never get there, of course, as well. People always like to throw around this statistic that 90% of traders lose 90% of their equity within 9 months, something like that, which I actually don't, that's actually technically not true. I think it's more like 80%. But even to that point, I would say don't also let stuff like that dissuade you. If you truly want to do it, it can be done. You can do it. It's going to take a shit ton of effort on your own behalf. It's going to take a lot of really long long hard looks in the mirror, because trading will teach you a lot about yourself that you might have thought that you knew, but but it gets revealed to you that you do not, and you might also get led down the path, or the dark road, so to speak, as I see a lot of people go down. But the whole point with this is I don't want to like scare people away from it. It's fucking hard. It'll take a long time, but it can be done if you truly make the effort. Don't let other people kind of dissuade you from it. If you really do feel like it's for you. Now, on top of that, obviously I have my channel where you're more than welcome to hang out. I would actually suggest not to get any of my programs to begin with that first. Just focus on it as what it actually looks like on a day to day, because a lot of people will find that this is just not the lifestyle that they want to live. It's not something that they're interested in. Now, if you want to take it more in like a practical, actual steps now towards actually learning it, like I said, don't put money at risk at first. Start a demo account. You got BitMEX, Deribit, whatever exchange is online that will let you essentially play and get experience without actually putting your money up. In a real trade. That's absolutely critical. If you can prove to yourself for like 6 months to a year that you are consistently profitable, then you're probably on a good route. Whatever you're doing is working. That's about what you're looking for to kind of verify yourself, I suppose. And then just repeat that over time. Understand that, and now I'm speaking very, very directly, like very, very literally. Understand that trading as a skill, as a profession, is a game of statistics. There is no way to be 100% perfect at this. I see a lot of people beat themselves up when they first begin, because we all get conditioned kind of in this Western world. I grew up in California. I think you did as well. And so, we go to school, we have our parents, they tell us what's right, they tell us what's wrong, we get graded on their behalf. Trading is not like that. You have to be able to be your own boss, make your own decisions. And with that, there is no right or wrong. And you can't consistently get a straight A grade on a test. You can't always ace your trades. It's impossible. I've been around some of the best traders in the world as a former market maker authorized trader on ARCA. And some of the best traders there, they take losses actually rather frequently as well. But what makes them different is that they understand the relationship between statistics working in their favor over time and just repeating the process. And that's what I've noticed amongst every one of the successful traders that I know. They understand that relationship and they trust in it, and they don't let themselves get too excited when they take a big win, because they know that it's just a number. It's quite literally just a number. And they don't let themselves get too down when they take a big loss, because again, it's just quite literally a number. Over time, it's the process mediated by statistics that will essentially allow you to be successful. That's where I found the best sort of interplay between lifestyle, like in holistic trading, I guess, and just kind of, really nailing that down over time. And if you can do that, then perhaps, that would be for you. And there, there's a million different ways to learn trading. That's not, I think that's kind of outside of the scope of things right in this discussion right now. But things can be really, really complicated. Things can be rather simple. That's up to you. I would say at the end of the day, though, what always brings it together is statistics. So if you can focus on that and kind of let go of a lot of that kind of nasty conditioning that we have, it can certainly be done. Just understand it's going to be difficult, going to take a lot of effort, probably a year to 2 years of concerted, really nailing it down.
So if you guys want to check it out and you want to get your feet wet, go over to Krown's channel, get yourself started just by watching some videos. I highly encourage you. Unlike some of the other quote unquote gurus in the space, Krown shows his trades live. He shows.
Yeah, actually, I had to. I should speak to that really quickly. I used to show my trades all the time. I had a little bit of a talk with my accountant and also lawyer, and we decided it's not the best idea anymore. So,
gotcha. So except for legal boundaries, he's putting in these trades, and I happen to know Krown personally, and I know for a fact that this is how he sustains himself, is by trading. This is his profession. So if you're interested and you want to get your feet wet, this seems like something you're interested in, I highly encourage you guys. Or you just want to know which way Bitcoin's going, you want to know which way the number's going to go, I highly encourage you to check out Krown's channel, link in the description. So if you were to wrap up this stage that we're in now, you said Bitcoin hasn't done this pretty much since it exploded from 3,000 to 14,000, and then before, when it broke out of its trend from 300 to 20,000. What are the critical numbers we need to have in our head for if Bitcoin gets above those numbers, things are looking really good?
Right. So the critical numbers that I kind of keep in play is that you want to be aware of course, the last prior high, about 10,500-ish region. That's relevant to the short term. 11,000 is kind of where that sort of measure move that I was showing off of that prior formation that we've been working on for the past few months leads towards. And then, of course, for the macro, the area where I think is where a lot of people actually get truly excited is about above 11,500 on a weekly closure. That's where things actually do really confirm major macro changes behavior. And this is always, of course, accompanied by a contingent factor on the other side that kind of, destroys all those ideas. Again, going back to the idea of this being a game based of statistics. And so as long as Bitcoin's essentially above that 9,900-ish level, I don't really see any real major reason to look at this as some sort of a fake out or some sort of a false breakout or anything like that. Even if Bitcoin came back down to 95.50-ish region, it wouldn't be all that problematic. Below there, then we can talk about, big swing failure patterns and what the downside probably looks like after that. But for right now, things look essentially good. A lot of confluent factors building up over the long period of time that would suggest that not only are we seeing something being resolved right now, but it has greater implications going onwards and forwards, essentially as long as those conditions are met.
I love great implications, man. Thank you so much for coming. Thank you so much for coming on. We hope to have you on more often now, especially as Bitcoins come back to life. We're really excited, and on behalf of the community, we thank you for sharing your expertise with us all. So thank you.
My pleasure, man. It's always beautiful to be here, and want to wish everyone well. And massive thanks for having me on.
Well, I hope you guys enjoyed this episode with Eric Krown. Again, be sure to go check out his channel, link in the description. He offers a variety of really awesome resources. As you guys can hear, this is an extremely exciting time here in Bitcoin land. We haven't had these kinds of metrics coming out of the Bitcoin charts for what feels like forever. And the last times that this happened, well, it spelled out true moonshots here. If we were to have the same proportional growth, well, I'm telling you this much, we'd all be very, very happy campers. If you guys got some value out of this, if you guys are excited about what's to come, do me a favor and smash that like button. And of course, if you're not subscribed to the Elio Trades channel, I encourage you to hit that sub button and don't forget to hit that bell notification. The bell is absolutely critical because, as we know, YouTube tends to shadow ban and restrict cryptocurrency content. So if you want to be sure that you're going to see my videos, especially like this late night videos, we're coming out at all times of the day, then do me a favor and hit that bell notification. Thanks so much for watching. My name's Elio Trades, and I'll see you very soon on the next episode.